Hi, welcome to the Market Alert for Monday, the 27th of June 2022. So there's a lot to get through today. It's going to be rather a long one because I'm going to look at the monthly and weekly charts of the stock market as well. But first, the news from Friday. Stocks ramp into the weekend while bond longs take profits. So there's been a switch in the sentiment. Stocks emerge from bear market as end of rate hikes priced in with recession looming. And first real buying in 3 weeks. Goldman trader explains why Friday's surge is the start of the next move higher. And then just a bit of bad news that we're all familiar with and aware of, and that is the European Union is again close to a meltdown. But that is irrelevant because the stock markets are poised to move to the upside according to all of the news as you've seen there. And also Friday's move, which saw the Dow move an incredible 823 points from the previous day close of Thursday. Meanwhile, economic news, G7 meeting going on at the moment, started yesterday. Core durable goods orders for the US and also pending home sales out at 3 p.m. The big news this week is going to be on Wednesday when we've got all of the central bankers, well, the European ones in the US, out speaking. That's Wednesday at 2:30 p.m. just as the Dow opens. That seems to be the big news of the week. The only other one, CB confidence news there, consumer confidence. And that's it, isn't it? We haven't got anything major outside of that. No CPI this week, no FOMC meetings, no, just got FOMC missed to speak there. So let's move on and start having a look at the stock markets. We'll start off with the Dow as we normally do. And in the daily chart, you can see the move to the upside on Friday. Strong move, 50% retracement at the 20-bar moving average from the recent high projected back. We went through all of the other retracements during Friday's session. So this is a newly drawn one, just to give you an idea. And the 20-bar moving average is a bit of a resistance area there for the overnight market. But let's go back and have a look and see how and why the market seems to be establishing that we are going to see a bit of a move to the upside. Well, that goes back to Wednesday and Thursday, doesn't it, with Powell making comments about he sees the ending of rate increases by the end of the year and then going into easing again and also more QE. And he's going to be facing that position. Obviously, they've got the midterm elections in October as well, and the markets or the economy is already going to wreck and ruin anyway. With the full-blown recession, they won't want that to happen, so they'll go back to what they've done since 2008, and that seems to be why the market is saying, well, the bear market's over. And if you look at the monthly chart of the Dow, we came back more or less to the 50% retracement, 29,654. We took out the psychological level. But as you can see here, we're now back above 31,500. That 30,000 level has supported the market. And also, you've got to take into account that, we've got a war, we've got massive inflation, we've got rate increases. I mean, they're throwing everything at it and the market won't go down. So when does it go down? We had the pandemic, and that was because that was completely new and that was outside of the financial system, so that sent the market down. But combined with all of the disasters that are going on economically and also with the war, you would think that this would fall out of bed, and yet here we have an 89% retracement in the shorter term there, and a 62% retracement from here to here. And if we were to draw in from the low of the COVID pandemic to here, where are we? We're looking at, let me just select these and move them out of the way. Oh, that's why I can't see them. Let me just add in the smaller ones there as well. I was going to say it seems slightly odd. So let's just have a look at these. So from here up to here, and let me drag them out. So you can see there's a confluence of fib retracements as well. So 38 is tying in with 62 and 89 of these different pullbacks. So from there to there, you've got from there to there as well. So and also the 50 EMA and the psychological level drop below it. They're retested down to the low that we've got there, and the market now moving to the upside. And in the weekly chart, you'll see this as well. There's the upside targets at the moment, back to the 20 bar and whatever. We've been oversold, and now the market's making its way back. And like I say, it's broken back above that 30,000 psychological level, came within a whisker of the 200 MA in the weekly chart as well. In the 30-minute chart for Friday, now we've looked at the longer term, you can see prices moving higher. It moved up 700 points in the cash market on the afternoon. Like I say, 823 from close to close. And the market overnight having a bit of a pullback initially, and now moving to the upside and sitting at, bring that over, at Friday's high, which it's already traded through and needs to get back through, and is sitting there quite nicely now, trying to get back above this level. So we're 5 minutes away from the 7 a.m. futures, so it's likely to see the market spring to the upside as well. And in the German DAX, we can see that price is also moving sharply to the upside during Friday's session there. 62% retracement from here, projected back at the moment, is where the market is currently struggling. We're back above the 5 bar moving average. 20 is some distance away, so these fibs will give you an idea of the roadmap back to this level here, which is, we'll just draw that in, 13,443. So there's a target on the upside if we take the 89 out there as well. Like I say, there's no major news this week, so there's nothing really for the market to move down with unless they announce something at the G7. But like I say, just think about it. You know, the war, the inflation, the rate increases, nothing is stopping the market from moving higher, apart from we have these shakeouts. And then in the longer term, if we look at the weekly chart, we're finding support at the 78.89, also coming off those lows as well. At the 200 MA in the weekly chart, critical level there. And in the monthly chart, also coming back to 78.89. And in the bigger picture, like the Dow from here to here, we've got a 50% retracement in the monthly chart where the market found support a couple of months ago. And since then, the market's not really come down and broken the lows, apart from this month where we saw the rate increase. That exacerbated things, moved the market down. But you can see that we're heading back to the 50 EMA in the monthly chart as well. So the daily chart for today, you can see prices starting to move to the upside. We can see the background of the market combined with what Powell has said, adding to it there. Something big will have to come out of the background to send the markets back to the lows at the moment, because the sentiment appears to have changed, and we'll just have to wait and see what that is. I mean, always trade what you see, but at the moment that's what we're seeing. And in the 30-minute chart for Friday, you can see that we had an initial shakeout down to the close, and the volume there and oversold, and then the market moving to the upside. The Dow kicking off on Friday afternoon, sending the DAX to the previous day's high, which is here. Just move that, you can see the high just tucked in there. And then we sat on the 200 MA, managed to get above it, and have continued to do so. And then overnight, we're already above Friday's high. Bit of a pullback there of 40 odd points at the moment, but trying to move back to the upside there as the futures comes on stream. Looking at the DAX in a bit more detail, you can see that we had the sell-off from the futures market down 150 points. Market showing a cluster of volume, stopping volume, climatic action at the previous day's close, and then you can see the market just making its way back with pullbacks all the way. And then in the mid-morning, we've got a bit of a pullback, which you can see there, but as soon as the Dow opened, we then continued to the upside, and again you'll see all of the overbought and oversold areas allowing re-entry in these moves. And overnight, you can see the market trading up to the previous day's high. I've had a bit of or through it, and now we've had a bit of a pullback there. So again, we're 2 minutes away from the open. So seeing a bit of a pullback there at this time. But bigger picture wise, and over the next few weeks, you can see that we've got the situation of the market potentially being able to move back to the upside. It's discounted all of the bad news. And in the S&P, also trading up to the 20-bar moving average in the daily chart. We took out the 38% retracement on Friday. We also took out the 38.40. Big move there, but only happening in the afternoon. If you look at the 30-minute chart, traded sideways and then just exploded with the cash market opening in the US, New York, 2:30 p.m. there. If you look at the daily chart there, like I say, you've got that the 20-bar moving average, the 50 fib. They need to be taken out if we're going to make an advance up to the 62. But in the way of the 62 and 78, we've also got the 50 EMA there. If we look at the monthly chart like the rest, you can see that we've got a 62 and a 38% retracement where the market's currently staying above. We also came close again to the 50 EMA, which also tied in with the shorter term moves in these markets or retracements, which is why you're seeing these, and this is why it's important to have them on there. So you've got targets when they're taken out in the daily. You can go to the weekly and the monthly charts and look at these bigger time frames to see where the market could potentially move to. Meanwhile, in the FTSE 100, this also retracing 78%. We looked at this last week, down to the 200 MA. We've seen the market starting to move back to the upside. We've got the 50 EMA, the 5 MA, and the 20 MA in the way here, and both of these, or the 62 and 20, and then you've got the 50 and the 5 there as well. So again, need to drive through these areas if the market is to move higher in the medium term chart and trend that we see here. In the 30-minute FTSE, well, after trading back to the DP, very, very slightly down, about 30 points on Friday, unlike the DAX that dropped to 150. We see the buying coming into the market. We get demand there, and prices then moving all the way, all day in the 30-minute chart without a red bar in sight once the market had started to make its move. And if we just have a look at the move from the low to the close of the Dow, you will see there 211 points up for the FTSE 100 there. And in the currencies, a bit sideways, waiting for interest rate news, which of course is already taken care of. This is the GBP USD. Obviously the pound waiting for the Bank of England to make some decision. We may see that on Wednesday when all three central bankers speak. But at the moment it's just fairly quiet and sideways for the pound. In the 30-minute chart, you'll see what I mean. It was a bit of a choppy session on Friday. Market up, market down, market up in response to the Dow, and then back down as the dollar gained once more. And overnight, you can see stuck in a narrow range there. So the currency is looking for some sort of news. The yen the same. We're getting into a bit of a sideways move here. We've got obviously the potential to move back to the upside there. These would be the upside targets. All dependent upon what the dollar is doing, and that's weaker overnight at the moment. In the 30-minute for Friday, we saw the market oversold with divergence, a retracement, coming back and then moving to the upside. Of all of the currencies, the yen is the bigger mover, of course, and overnight so you can see trading up to Friday's high, and the 200 MA market has pulled back and now trying to get back above the DP there. And finally, in the metals, well, we can see that these were tested on Friday down to 2050, which we'll look at in more detail in a moment. And this is also an 89% retracement. We got to this level. I was hoping we were going to get down to $20, but we got 50 cents short of that target. And then the market rebounding because the PMI numbers, no, it wasn't the PMI numbers, that was Thursday. We saw the market moving higher as a result of some economic data that came out. Let me just have a look, just remind myself. There was some news on Friday. Retail sales, wasn't the retail sales? Here we go. It was the consumer sentiment is what sent the market higher, because it hadn't really come down a lot considering the rate increases, and that was used as the catalyst to move the markets to the upside, which we see here. And if we look at the 30-minute chart, you'll see that they slammed the market down. I mentioned this 2 or 3 times last week. They like to shake the market out. They did, down to S2, and then they saw demand coming into the market. We had a switch, and then we've moved to the upside since. Whether this holds, we'll have to wait and see. There is some bullish news around at the moment, which we'll look at the moment. In the monthly chart, we're still sitting at the 50% retracement and the 50 EMA in the monthly chart. And in the weekly chart, we've retested that 89% there at 2067.2. Which we're seeing there for Friday's low. We actually came down to the 20, within a gnat's whisker of the 2050 level there. So a bit of selling coming into the market overnight there, but as we're seeing at the moment. Meanwhile, gold also moving higher. It's gapped higher. Why is it gapped higher? Well, I'll show you this. An interesting couple of news items as well. They've got the gold-silver ratio, so you can see silver's a bit stronger than gold, despite the fact that we've got some news overnight. Friday, Switzerland imports Russian gold for the first time since war. I assume they're talking about the Ukraine war here. More than 3 tons of gold was shipped to Refining Hub in May. Well, I thought there was a ban, according to the G7, and was put in place back in March. Complete BS, you can take no notice of it. And then yesterday, the reason for the gap is they came out over the weekend at the G7 saying that UK joins ban on import of Russian gold. Complete nonsense. They can get around this, no trouble at all. And then if we look further into the article, you will see that there's 1 or 2 others that have joined. UK, Canada, Japan will ban imports of Russian gold in an effort to Moscow's ability to fund war in Ukraine. Absolute nonsense, isn't it? I mean, everybody's paying for the gas and the oil in rubles. So, they were forced to do that. So, again, it's just rhetoric, isn't it? And grandstanding by the G7 to make it look like they're doing something. So, that's why you're seeing the gold price gap up on the overnight. And there you can see big move to the upside, but of course they soon sold into this. They don't want gold moving higher at the moment because it will look like the dollar is failing. Now that will come later on in the year when they go back to QE and start reducing interest rates, because the economy is gone to wreck and ruin, which it's going to, but they'll try and save it like they've tried to for the last I don't know where we're up to now, so 2008 to 2022. So the last 14 years. But you can see gold struggling a bit there at 1835 at the moment. And dollar, well, that's been moving down on Friday as the prospect of, again, rates only being increased for the next few months. But sideways overnight. They want to keep the dollar strong and pressure, and keep the downside pressure on the metals markets. And finally, crude oil. Sideways to higher there, so expect higher fuel prices going forward as well. Okay, that's it for this one. Like I say, a bit of a long one, but we've got some targets and an idea of where we're going this week. Of course, you should trade what you see as the market unfolds, but if you know the background of the market at the moment, after Friday, it looks like they want to move the markets higher in the short term, if not a bit longer there, to try and keep the impression and the illusion that all is well in the markets. Okay, that's it for this one. As ever, thanks for watching. See you in the next.